Welcome back to the CG Money channel. Today, we're diving into the top high dividend yield ETFs that you simply can't miss, especially if you're looking for monthly payouts. Let's be real, who doesn't love a little extra cash flow every single month? We're going to be taking a look at some of the best ETFs out there that focus on high dividends. And best of all, these bad boys pay out monthly. Now before we jump in, I gotta put on my disclaimer hat for a second. This is not financial advice, I'm just a guy on YouTube, sharing some info that I find interesting. Always do your own research before investing in anything. Alright, with that out of the way, let's get started. We'll be covering their investment strategies, their historical performance, and I'll even throw in some of my own personal insights because why not? By the end of this video, you'll have a solid understanding of whether these ETFs are the right fit for your portfolio. Let's get it. First up, we've got the Global X Super Dividend ETF, ticker symbol SDV. This ETF is all about that global diversification, investing in 100 of the highest dividend-paying companies around the world. We're talking about companies from all different sectors and countries, which helps to spread that risk around a bit. Now, one of the biggest selling points of SDIV is its juicy dividend yield. I'm talking potentially double or even triple what you'd get from the S&P 500. And the best part? They pay those dividends out monthly, baby. That means you get a nice, steady stream of passive income coming in every single month. But of course, no investment is perfect. SDIV does come with a slightly higher expense ratio compared to some other ETFs out there, so you gotta factor that into your calculations. And keep in mind, chasing high dividend yields can sometimes be risky. Companies with super high yields can sometimes be a sign of underlying problems. Next up, we're diving into the financial sector with the Invesco KBW High Dividend Yield Financial ETF, or KBWD for short. As the name suggests, this ETF focuses specifically on financial companies that are known for their dividend payouts. Think big banks, insurance giants, asset management firms, the companies that keep the money flowing in the economy. Now, the financial sector can be a bit of a roller coaster ride at times, but it's also historically been a solid dividend-paying sector. And that's where KBWD comes in. If you're bullish on financials and you're looking for some juicy monthly dividends, KBWD might just be worth a look. Just remember, diversification is key. So don't go putting all your eggs in one basket, especially in a sector as potentially volatile as financials. Alright, moving on to the Global X Super Dividend US ETF, ticker symbol DIV. As you might have guessed from the name, this ETF focuses specifically on US-listed companies with high dividend yields. So if you're looking to keep your investments closer to home, this one could be a good option. Now DIV follows a similar strategy to SDIV, but instead of investing globally, it sticks to the good old US of A. They're still all about those high dividend yields and monthly payouts, but with a focus on US companies. This can be a good or bad thing depending on your investment strategy and how you feel about the US market. Just like with SDIV, it's important to remember that chasing high yields can be risky. Always do your research on the underlying companies in the ETF, and make sure you're comfortable with the level of risk involved. Now let's shift gears a bit and talk about the iShares Preferred and Income Securities ETF, or PFF. This ETF is a little different from the others we've talked about so far because it invests in preferred stocks and income securities, rather than just common stocks. Preferred stocks are kind of like a hybrid between stocks and bonds. They typically offer higher dividends than common stocks, but they also come with less potential for growth. PFF aims to provide investors with a steady stream of income, and it's been around since 2007, so it's got a pretty decent track record. One thing to keep in mind with PFF is that it can be a bit more sensitive to interest rate changes compared to some other ETFs. When interest rates go up, the value of fixed income securities, like those held by PFF, can go down. So, it's something to keep an eye on, especially in today's rising interest rate environment. Last but not least, we've got the SPDR S&P Dividend ETF, ticker symbol SDY. This ETF is all about investing in companies with a long and consistent history of paying dividends. We're talking about the dividend aristocrats of the S&P 500 companies that have increased their dividends for at least 25 consecutive years. Now SDY might not have the highest dividend yield compared to some of the other ETFs we've talked about, but it makes up for it with stability and reliability. These are companies that have proven their ability to weather economic storms, and continue rewarding their shareholders with dividends. If you're looking for a more conservative approach to dividend investing, SDY could be a solid option. It's all about finding that balance between risk and reward, and SDY definitely leans more towards the stability side of the spectrum. That's it for today's video. If you found this information helpful, make sure to like, subscribe, and hit the notification bell so you never miss an update. Happy investing!